Well, we just saw oil prices trading at 106. The oil's had a nice little run in the last little while. So what's in the oil industry per se that might be worth investing in? Mark Lackey joins us, Executive VP of CHF Capital Markets. Mark, great to see you again.
It's great to be here, Pat.
Let's talk about oil first, because I certainly didn't expect it to see it up towards 106, 7, 8, 9, 10.
Well, certainly, Pat, we were suggesting this year we thought we'd trade between 95 and maybe 110. And obviously the issue in Iraq has become something that I don't know if anybody really saw this coming. When I look at it, I don't necessarily think that a small group of militants can get all the way to southern Iraq and take over the oil fields, although they seem to have had some definite success in northern Iraq fighting the army. So ultimately people should keep their eye on that, but to get a spike in oil prices, Pat, say the 125, 130 range, they'd have to take over the south. And we don't think that's going to happen. But nevertheless, if you look at the growth in auto sales in North America, Europe's coming back, and of course China's been much stronger than most people realize on the auto sales side. This has been very positive for gasoline demand in particular, and also diesel demand. So, we're in line with where we thought oil prices would be at this time of the year.
Yeah, but the caveat, though, is that there's lots of oil now they're finding in the United States. Do you think oil prices can stay here, number one? And if so, or not, would you invest in exploration and production of oil or other areas?
Well, to take your last point, one of the reasons the three companies I have here today are oil service companies. I think that's where the leverage is right now, Pat. A lot of oil companies have done extremely well. Even a lot of the juniors have moved quite a bit. But you haven't seen the same movement in the junior and mid-sized oil service companies. The big guys have moved. To go back to your point about the U.S., yes, they are finding more oil. But when I keep looking at the demand, and I keep going back to one statistic I threw out at people, that the U.S. has one car basically per person, and in China it's one car for every 10 people. And in India, it's one car for every 20 people. I mean, the demand possibilities there, I think, are just going to definitely outweigh potential supply. So I just think that there's still going to be a strong oil market. The mistake I also think, Pat, that I'd like to point out, you're getting people who look at the forward strip, and that's trading at 85 2 years out. Well, I point out to you, if you went back 2 years ago, it was trading at 90. So I don't try to forecast based upon the futures and the forward strip, because I don't think it's very effective.
Okay. Now, your ideas. I don't know any of these. Brychem Corporation.
Yeah. Well, Brychem, Pat, is out of Edmonton. They have been typically in the steel casing and steel pipe business, but they started getting more in the fluids business. And that's what kind of attracted me, because while steel pipe and steel casing is a good business, the fluids
What does fluids mean, though?
Well, basically, Pat, they're the fluids that are used in fracking and in drilling. All kinds of various types of fluids that are used to improve the fracking capability dramatically. Because if you don't use some form of fluid, you're not going to get anywhere near the kind of permeability and get the results you need.
Yeah, to push it through.
Absolutely.
In competition with or in concert with fracking sand, for instance?
I would say it uses fracking sand. It's actually a complement.
Okay,
because, yeah, you're not going to do well without good quality fracking sand, but if you put fracking sand in there without proper fluids, you're not going to get nearly the results you're hoping for. So, yeah, the two are very necessary. So the fact they got in the fluid business a few years ago, and particularly in they're actually big in Alberta and Texas. And I should point out BC, Alberta, Saskatchewan, Texas, Oklahoma, North Dakota, South Dakota. Those are my favorite places to be involved. That's where the biggest growth is. So Brychem was smart. They went out and bought a bunch of fluid business, and I see that becoming more and more their business going down the road. I think that gives them an opportunity for some significant growth in terms of their earnings and their revenues down the road.
Yeah, all domestic. It's not like we're looking at international expansion too?
No, the only place they might expand into, because they're big in Texas, they have talked to Pemex. And as you know, the Mexicans want to get more investment into their oil areas. And I think that whole line between Dallas and Houston goes into Mexico. So I think there's some great shale opportunities for the Mexicans. They haven't even really looked at them yet.
Wow, isn't that something? Okay. Enterprise Group.
Well, now Enterprise has been a consolidator of a number of smaller companies, again, out of Alberta. They've got in the backhoe business, they've got in the tunneling business, they've got in the oil rental fields business. And I like what they've done, because they've grown this company fairly significantly in the last couple of years. They had a lot of cash, and they had and used their stock in order to buy out a lot of these companies. And so again, this is a really good play if you want to play Western Canada, particularly Alberta. this is one of the companies that's well positioned, particularly in the Edmonton area and north. And I think there's some great growth opportunities, Pat, as we've experienced in the bigger oil service companies.
Okay, but when you take your consolidator and you put
Right.
other cultures together, whether it's ma and pa or small corporations, those kinds of things, do you do that by buying them out and then putting your overlay on top of them?
You know,
Or do
that's
you
a
go
really good
50-50?
point, Pat, because I think my answer to that is it really depends on how well those individuals can fold into the organization.
Yeah, and how many walk away?
Well, you get some, but I have to tell you, one of the things they've been good at is they've been pretty good at retention. So they've only gone in there and obviously talked to people, and these were not hostile takeovers. These were ones where people said, look, I might need an exit strategy down the road. Well, we'll give you one, but you come and work for us for 5 to 10 years, and then we have it all incorporated within our organization. So you're right, I can give you cases of some takeovers I was in that didn't work out too well. But again, you have to have the right culture. And I think that if you're really out there looking at a lot of opportunities, it becomes pretty clear after you deal with some of these people whether or not it's going to be the right culture, because not everybody wants to be taken out. So I'd say stay away from the hostile takeovers. Only take out the guys that it makes sense for.
Okay, good.
take out.
Titan Logics.
Yeah, Titan Logics. Now, this is kind of more of a technology play, but a technology play on oil and gas. And effectively, these guys have technological services for the fluids industry. So they have gauges, they have other technologies that really have helped prevent, accidents, and they've done a good job of being able to use their products, and it's much more efficient in terms of the employment of the fluids. So it's a niche company, but it's an interesting play because I don't know how many other people would have thought to get into that kind of niche. And the guys in Western Canada really like the way this company's run and how well they've done with their niche products.
Just before I let you go, though, gold prices got to $12.50, which you said they might get down to.
Right, that's right.
And now they've rallied even $27, $28 today.
Up to
Or up to
$1,300.
$1,300. Where do you think?
Well, as I said, Pat, I still think that through the summer it's still going to be a bit bumpy because even though seasonally you get a bit better in July, you have to recognize that there's still a lot of skepticism out there. So I think they'll be bumpy for the next couple of months in that $1,250, $1,300 range. But as I've said, as we go through the end into the fall, I think we get back up over close to the $1,400 range.
Okay.
So I'm actually relatively positive. I'm not the hugest bull in gold.
And I think I took $1,200 right off the
that's
top.
right.
So,
Yep.
so far I'm winning, not by much. Mark Lackey, Executive VP, CHF Capital Markets. That's just a side bet for a cup of coffee. We're going to come right back.